What's up, guys? I'll wait a few minutes here to get started. Otherwise, if you're here early, go ahead and post any questions or any requests for charts you may want me to look at in the YouTube chat here. And as always, none of this constitute as financial advice. This is all for purely educational reasons. If you're seeking financial advice, please seek out a professional financial advisor. Hello, hello. And Cardano pushed past 3 USD by mid-September, which is the Alonzo upgrade. So if we're looking at Cardano, use Tether here. We're gonna do it on the, it's a better, like Binance for now. And we're looking at September. $3 is not too far off. It's 4, 3. So just looking at the scale of things here, we have a big monthly push up at the moment at the beginning. I mean, still like the second week of August right now. We're pretty much riding past up these highs over here. But one thing that we do have to break is the all-time high currently over here at 247. Now this might be a different price depending on the history of it, because most exchanges have it this particular coin introduced years prior. So, but for Cardano specifically to go to $3, it's hard to say how long it will take to hit a particular price. But what we can see here that it is particularly still moving to the upside, because for one, it has held off from losing the support down here, but it's still maintained by the all-time high resistance over here. So unless we see price actually break above it, and we can see a monthly closure or even a weekly candle closure above 247, then we can see price continually move higher. And getting from 247 to 3 is not difficult by any means, but we just have to really see how the volume plays out once it approaches this area over here at 247. So it's gonna be um, kind of difficult to say if it will hit $3 specifically by a certain time frame. But the likelihood of that seems to be much higher than most assets currently out in the market, particularly from this current action right now, because this is a pretty good amount of upside movement, considering how the past pretty much few months have been doing. But I don't know the Alonzo. I don't know what that is. I'm gonna tell you guys straight up right now. I don't look at fundamentals almost at all ever. I just don't look at that type of stuff when I'm trading because, for one, what I find is that fundamentals typically uh, are lagging in the sense that the price action already occurs and then the media follows it, uh, pretty much being way too late for it to be a sensible trade or a system to trade off of. And two, it doesn't make much sense to just trade based off the news when you have all of the data right in front of your eyes and the best tools available, depending on how you trade as a person. So for me, I trade price action. I focus on how candles form, what they're doing, what specific price levels they're hitting, and how they're forming or behaving around certain levels, and how they approach certain levels as well. So for me right now, Cardano's looking pretty good. This big push up on the weekly is really nice. This monthly is also looking way nicer. But what I'm really concerned with most is how this quarterly candle is going to end, because we only really have about after September ends. That's when or when September ends is when the new monthly or quarterly candle opens up. So if it can get above 247 and close above there, especially on the quarterly, this thing's going to skyrocket pretty much. Well, not skyrocket, but in the sense that it's going to move much higher, because it will then continue the trend to the upside. Whereas where we are right now, it's kind of just milling around, still kind of ranging between all-time highs and the really hard support that we got here around the dollar. And someone asked about Doge. I haven't looked at Doge since the whole thing at the beginning of the year. Audio too low. Looks like my levels are fine. It might be your device they're using, because I'm hitting almost the red here. Let's see if we can bring it up a little bit. This should be a little bit better, right? Right here. So I only got like one complaint out of 6 people so far, so I don't know. Either way, I've adjusted the audio to be a little bit louder now. Yeah, it should be fine. All right, so someone asked for Doge here. No, I haven't looked at this pretty much in a really long time, and I should probably get off of Binance US. That's also Binance US. There we go. All right, so futures contract for Doge here. Doge USDT under Tether. Doge is something that is probably one of the worst assets to have ever existed, in my opinion. But I know for many it's the starting place in recent times to join in on the investing way of life. But this is one of the worst assets to have ever popped up in the market, because for one, it's fundamentally a meme coin. There's literally not a good use for it. But otherwise, what it's doing right now currently, we're still kind of sitting around a range here. We haven't really done anything particularly meaningful. Price is barely moving to the upside. We are slowing down the selling over here though, from May into July. So we've started to round off on this area over here. But regardless, what I'm kind of looking for is for price to either tap up higher into the 36s, which in my opinion is probably a little bit unlikely for funsies. I mean, sure, you can take a look at it that way, but I would like to take my money very seriously, just personally. But either way, 36 is a pretty much a very important level for price action to behave around, because for one, this is an area determined by price not only rejecting but also bouncing off of. So if you notice over here, on this weekly candle around May 10th, we have a bounce off of that. Price moves under it. We have rejection. And over here, prior to it as well, we have some price barely being able to close above it. So this area around the 36 is a very important price level, particularly for this, because it does determine not only a long-term trend, but also a shorter-term trend. So looking at current price action, we are rounding off. We see a decline over here. Price is rounding off at the moment. So upside is pretty much kind of the looks here. But if we move down to a lower time frame, in this case, we're looking at the daily, we do see pockets, or rather areas, where price has not been tested and has been left behind for further selling to occur. So that particular spot at the moment is actually going to be around the 36. And when I'm talking about that, I'm talking about these big downside candles where price doesn't get a test into it. So we do have this area right here, particularly, and then almost in the middle of this candle, around 35 to 36, where price was not tested into. Just kind of pixel perfect, right around here. It's like mid 35s, almost 36. So that area is definitely going to be a area of interest. But currently, the daily action at the moment, after this pump to the upside, we're already seeing some selling here. Notice how it's getting really rocky already as it's moving to the upside. Getting large wicks here with selling into it. So price is either being shorted already, or it's not even, it's just being profits taken. Are you in any trades currently, and what are they? No, I'm not into anything right now. If you guys don't know, I mean, you actually guys don't know at all. You guys barely know me. But I'm actually a market analyst, recently hired by Pablo and the team, Pablo and Nima. But I am a market analyst, and I post daily futures and overall just stock market stuff. And that's my kind of area that I primarily focus on. But I've pretty much developed a pretty strong strategy surrounding the concept of price action, where I can apply it to pretty much any market. And I primarily trade futures and forex. I don't dabble into crypto too often. It's just not my type of market. It's not something that I'm too interested in either, just in the sense that it has a lot of workarounds that I would have to go through just to, get an interest to it. But either way, uh, no, to answer that question all the way through, no, I'm not in any trades at the moment. I'm pretty much flat, moving flat into the weekend here. And my main style of trading is pretty much scalping and day trading. Most of my trades barely last an hour, but sometimes I do swing it within the day, but still day trading regardless. But yeah, my main focus is going to be around futures and futures, as in like the Nasdaq, S&P 500, oil, assets like that, and then forex. But moving back to Doge here, we're seeing some. Is your strategy secret, or you share it here? It's not a secret, but it's a difficult concept to understand because it's still support and resistance, and you're gonna see me you're gonna see me every week. Like every week, you're gonna see me uh, mark out charts the way I do and the way I use them for trading. But the particular psychology behind it is just gonna be pretty much confusing for most of you guys because it incorporates a lot of different concepts about the market that's being traded. And I didn't learn any of the materials from like books or anything like that. I've talked to other traders in real life, and they taught me the way I do now. So it's not like something I can't show you, but it's just more so you're gonna have to sit here for a while and listen to me and make a lot of notes. And on top of making those notes, you're gonna have to spend months just practicing it because it's not your typical strategy. Just a show of hands, real quick. How many of you guys use indicators when trading, or you use like Elliott wave theory? And while wait for the that question for you guys to be answer yourself, I'm gonna move back into Doge here. So looking at the daily price action so far, big pump to the upside, and we're already seeing some rockiness. So this is gonna turn into pretty much a typical market pattern, particularly maybe a rising wedge or so. But regardless, we're gonna have to look at and see how market reacts to the 35.36. If we get a really fast movement above it, then we're going to for sure see some higher movements. Probably look at this pocket of liquidity over here and around 46. And then off of 46, we also have around uh, 60 or so. But this is likely going to be passed up over here around 60. Me, I use it, but I've been told not to really to rely too much on it. This indicator's not that good. So here's the thing. My advice to y'all at the moment: use what makes you money. And as simple as that sounds, the nuance behind that advice is to experiment with any strategy that works for you and make it consistent. So it's okay to use indicators. They exist for a reason. Hell, people in hedge funds use indicators, but they use it differently in the sense that it's mathematically adjusted to be automated. But a lot of traders that have egos and are approached by younger and newer traders tend to give off their own pretty much advice and try to like persuade others that they have a more elite version or strategy of something that they want to sell. So that's one thing about this field, especially in the social climate that we're in, right? For trading, at the most part, is that when you approach or you're being approached too, that could work either way. And someone tells you that you shouldn't be using this, you should use this instead. They're likely going to try to sell you something. So my advice for y'all in regards to that is find something that works for your mindset, the way you trade, the way you behave as a person. Apply it to the markets, practice it. If it's not making you consistent money, move on to the next thing that might make you more money than the last. That's the one thing about this. It's really about experience. It's not about what tools you have. It's really about how well does it work for your psychology and how well does it work for the way that you're looking at the markets. I'll look at the XRP chart in a bit here. But I'm not saying indicators are bad, but I'm just seeing how many guys in here, guys and girls, or if you're non-binary, then they, them. It's just seeing how many people in here are looking, are using indicators as a way to look at the markets, just so I can gauge what type of advice I need to kind of, or not advice, but just kind of like educational stuff that I need to talk to you guys about. Because everyone lies on a different educational level. So the point is everybody should develop their own strategy based on the way they think. Yes, precisely. That's why the reason why I said about if I could share my strategy, yes, I can, but it's just going to be really confusing for you guys because it's the way I think. And I can't really explain the way I think. Like you guys are probably already getting this by the way I'm talking to you guys right now. But yes, that's precisely it. So in regards to that, like question slash answer, yes, develop your own strategy. Mix different types of concepts together and see if it works for you. I've seen different traders use tapes, volume, volume tapes. I think it's called order flow in conjunction with price action. And there's people who use algorithms alongside with indicators. It's not even about FOMO. It's more so about, is this working with the way I approach the market? Yes, Sam, that's pretty much what I'm saying, but like you have to be consistent with it. That's the issue. Most people are not consistent with a strategy that they're with because they're stuck on it. So what I see from a lot of people is they find a course and they stick with it. Uh, or let me reword that. They find a course that they buy and they stick with the strategies and concepts taught in that course because they paid money for it. So now they're financially committed to a certain concept and education that they receive because for one they've paid for it, so they're thinking, hey, since I paid for it, it should work, right? And that's the mistake that I see a lot of people do, is that they are sticking to one thing when it clearly doesn't work for them, or it's an obvious sham. All right, back to the meats of this, of Doge. What I'm looking at here is we have pretty much three different possibilities happening here. One, we get a big run up past 36 and price continues higher. Two, we get a rejection into 36 and price begins to consolidate here. And we've been holding on to this pretty almost irrelevant support at around 16, 17 cents for a while now. Or three, we get a rejection into 36 and price moves down lower and we retest 16, 17, whichever number you want to look at as, but the general ballpark right here as a resistance, and then price moves down lower and we hit into probably like around 8 cents or so. But at this point at the moment, it looks like we're looking at around this consolidation over here, because unless the next like few weeks or even months approaches this 36/37 cent level and it gets a big run up, it's more likely that we're going to see a longer term uh, consolidation, as price is still technically moving to the upside. We haven't really moved into a downtrend yet. We're still uptrending, but this is pretty much considered a dip in a sense. I know a guy who just traded to make $50 daily, not go chase big bucks, and he's still making money to this day, no losses, but the discipline is robotic. Here's the thing. You don't have, like, that's technically not a strategy. That's just your daily goal. When I'm talking about strategy, I'm talking about like technical analysis strategy. Yes, $50 can a day can move into smooth amounts, huge amounts. That's very possible. Yes, that's 250 a week if you're trading in the regular market. That's pretty much 1,000 a month, 12K a year. That's minimum wage, depending on how he trades. But either way, if it works for you, then it works for you. But there's levels and tiers to this area when you're looking at it from a technical standpoint. But either way, I'm done with Dozier. And to remind you guys, this stream is being archived. So for those that have joined late, you can watch back later on. Or for those that are going to dip out soon, depending on what time time zone you're in, or you just have something else to do, you can watch the rest of the stream here later on. All right, so someone earlier asked for XRP. XRP USD. I'm gonna go with a different exchange here, I think. Which one was it? I'm not going to use the Tether ticker since it has a shorter amount of data. Since Tether was not was introduced not too long ago. I think FTX has the longer one. All right. So typically I start from the top down, and started only on it for 2 years. A Bitstamp. I typically start from the top down in terms of highest time frame to the lowest time frame because the way I look at charts is trends and everything alike. They point towards the higher time frame because it's the biggest picture. And when you're looking at the goals of investors in things like firms and higher just institutional funds and stuff like that, right? They look at longer term investments and profits rather than something shorter term. They're not looking to, day trade, for a few $1,000s. They want to make sure that their $1 million in investments turn to billions of dollars, of profit. So I always start from the higher time frame, see what price is trying to do, and then work my way down to see the details of that movement. So what we got here is price starting over here at around what's that? 2 microcents, a fraction of a cent, a fifth. Price over here moved right into the yearly open of 2018. Big rejection off of that. So there's liquidity being driven off of that area over there. A lot of selling. Quarterly, say last quarter we did that. Price this quarter is currently trying to recover that movement. Went to the monthly here. Kind of have like a support developed around this area at around 14 cents, but it's not too relevant at the moment. We're already seeing price being pumped up from there. It looks like we got a possible cup and handle type of thing going on, but I don't really use patterns like that. Another thing I'm kind of noticing here is price is trying to prop itself up above 67 cents. You can see that these monthly candles, though they did dip below it, which is okay, both of these months, June and July, managed to close above 67 cents to continue the shorter structure here within this range to move to the upside. We probably got some sort of selling over here in the future, depending on how that goes. See, we price test into here already. Okay, got a big move up from this week. We got the candle closing about 1 day and 22 hours, so pretty much Sunday. We're gonna see where this ends up closing. But my main concern is going to be this ballpark right now. If you reach up into this area sooner or later, we got pretty much 3 different scenarios going on here. We either see price reject from it, for the big push up and price rejects into there. We get a really slow approach towards there, another rejection, or we see price push past higher, retest this on another day about $1.06, 60 cents, excuse me. And with that retest, we move higher into the 197 over here, where price tested into the yearly open of 2018, which is over here. From there, we do have to deal off with this all-time high situation, but we're going to ignore that for now, since it's not relevant at the moment. So with current price action here, we can go down to the daily. Price is still kind of dealing off with previous areas of former support turning to resistance. So notice how this was kind of forming as a support over here, where price made an impulsive move to the upside. We got support formed, bounce, price kind of ranging over here. We got rejection, big selling, price moves below it, retest as resistance, comes back down, resistance again. follows suit over here. We kind of have a support being formed around this area. And now we're back over here. So with this current swing over here, what we're kind of looking at is on a shorter time frame in terms of the daily chart, is if price can close above this looks like $1.10, but it's probably a little bit irrelevant. I'm mainly looking at the structure to see if it can continue to move to the upside here. If we were to move to the downside, we would probably be looking at price failing to hold this 96 cent lower time frame support over here, and this is probably off of like a 30-minute chart. Yeah. So same thing happened over here. So notice how I was off of the weekly, actually rather the daily, where you had big impulse move, price moves into that area as a support, and then price meanders around till there's the top, then we get a sell, move on under it. We move back down to the 30-minute. That pretty much was the same exact thing that happened here, like almost spot on. So impulse move, price move down to the support. Let me redraw that. Support, move higher, meander. There we go. And then we get a eventual flip over that. Price moves back up above it. But I'm kind of looking for this big push-up candles over here to get past previous resistances to use as support. Goes back down, and then we're getting the same action over here. Now that we're moving to the weekend, though, crypto price action becomes way less relevant. You have way less volume and liquidity being traded, so it pretty much becomes a point where on the weekends it's just better to just close the charts and not worry about anything unless you're in heavy and you're over you risked way too much money for whatever reason, or you're like over leveraged. But either way, XRP over here is looking pretty nice. But I'm kind of looking at the 96 cent area for the shorter time frames, see if it holds that as support on the lower time frames. If it does, then on the higher time frames, we should see a continued move higher into at least $1.40 over here. All right, and if someone had asked about another asset. I think that was it. So it was Cardano, and then Doge, the XRP. Yep. All right. Yeah, I'm pretty much caught up on the chart requests at the moment. So any other questions here? And again, you guys can ask anything you guys like that. Could you look at VET? Absolutely. VET USD. I think Bitfinex has a longer history here. I'm not sure if this is accurate. Bittrex. There we go. 2020 that way. Tether. I don't want to look at Tether. I'm not sure when the VET was introduced. Pretty sure it was in 2020 though, if I'm not wrong. Here we go, BitMEX. This is different though. Yeah, it's weighted. Let's use Binance for now. Okay, so we have starting price over here. Do you think Dow Jones Transportation Index can be used as an indicator for market crash? Not really. I mean, yes, but there's also the Nasdaq, and then you have the S&P 500. So there you have more than one asset to look at if you're looking for a market crash, or even just like a market pump if you wanted to look at it. If you would scalp Doge now, what numbers would you buy and sell on, please? I wouldn't trade Doge right now because it's moving into the weekend, and there's no point in trading on the weekend because crypto action on the weekend typically just consolidates, or you get one big move and it doesn't move anywhere else. So I wouldn't even trade or try to scalp it. And a nicely worded question too, by the way. I see what you're trying to do there. I don't do handouts like that. All right, so we got that open and closure over here. We got all-time highs over here on vet. Moving to the weekly. Notice on the monthly we got a big move down, but price is being bought up from these wicks. So we're seeing a lot of buying stepping in around this area. And that conveniently also turns out to be a market pattern. So you call that a falling wedge. Either way, big nice move up from the past few weeks here. Past 4 weeks have pretty much been a reversal in a sense. But with this reversal here, this week by far has the largest percentage to the upside. But notice on the daily over here, I don't know how volume is on this. I don't think Vet VeChain gets that much liquidity to begin with. But notice how the action pretty much has been a little bit rocky as it trends to the upside. Now that typically is a concerning thing because you would like to see these big type of candles move when you're moving in a trend because that typically shows a strong trend. See these big candles, those large daily, how big is this? Oh, 8 cents. Wow, this moves in a terrible, terrible margin. Did not realize that. But either way, that type of action is what you're looking for when you're looking at a trending market. But sorry about that. I had to reply to a text real quick. This uptrend here, even though the weekly looks a lot nicer, the daily is showing a lot of selling happening as we approach to the upside. So we're seeing selling here, here, and then overall it's a weaker trend on the daily, much weaker than what the weekly is showing us. So even though this is moving to the upside pretty strongly, we kind of have a support being derived off of this impulsive level over here from when price kept making new highs. This action over here is showing me that price is still not ready to completely uh, make another new all-time high yet. To me, this is more so prices slowly being injected with buy orders, and it's slowly incorporating those buy orders, seeking not only fears of, or not fears, but more so concerns if this is a asset to trade in, but also the concern of if trend is going to hold this up. So yes, it's still in a technical uptrend, but the way it's looking at right now, it's particularly where it is in terms of structure, it's dealing off with this local range. So you kind of have like your highs over here, and then you have your longer term support over here from around 5 cents. Move on to the daily. Let me adjust this a little bit. Notice how price is also flipping from a previous support over here. But price over here has to do either of the same three scenarios that I've pretty much been looking at all the charts. You either get a big push up, you can get a little pullback on that, price launches higher into around 20 cents, or price continues to slowly approach this, meander around here, and then you get a drop off. And, depending on how big that drop off is, it's either gonna bounce here or you're gonna reject from there. Or not reject, but you break it and then you retest it as a resistance. Or you get a really fast move up, but depending on the candle that is in focus, I think that the candle in focus here is probably going to be more likely on the weekly chart, I would say. So in this instance, if you're looking at the weekly chart, if price doesn't close above 15 cents on a really fast candle on either a daily or a weekly, it's probably going to be a wick, and you're going to reject from that and move down lower. But either way, uh, V chain here is looking kind of rocky. I mean, yes, it's still moving to the upside on the shorter term thing, shorter trend. But it's not so great in the to the point where you should jump in it. I would just stay out of this and seek a better spot to get in and on a trade, because this uh, to me is just kind of ugly in a sense too. It's just not a natural trend. It's not a healthy trend either. And then someone here has asked for Sol. Was it Sol USD? Solana? I'll use Coinbase's. It's a little bit more trustworthy. Although I will look at other options to see if they have longer history. I think Kraken may have some different price point though. This is the main issue I find with crypto, is that they all have different data. It's not centralized, and it doesn't have the same liquidity. Maybe FTX is probably the best one to use here. Yeah. I don't know the history behind it being on FTX, but it looks like that's the most amount of data. So I'm gonna mark out our starting point here. What price is currently doing. Off of the rip though, the yearly has been buying up. That's three, or not the yearly, the monthly has been uh, pumping off of this $20, $22 area here. It's a pamp. That's why it's not natural. I don't know what you mean by pamp, but when I trade price action, I look at the way price behaves, and that's typically a sign of either low liquidity or it's slowly just being or slowly dying. It's one or two things. Reminder that I trade efficient markets such as NASDAQ, and that has a lot of money flowing through it. So I get faster price action just on a daily basis. But over here is Solana. A lot of buying over here since May off of the $20 area. The weekly looking real strong too. Pump, sorry, pump is a meme way of saying. Really? Is it a pump? To me, I mean, technically, yeah, it would have been a pump, but it's a really weak one. If it was a strong pump, it would look like this on Solana, where you get fucking weeks. Just straight weeks of pumping here. A lot stronger. The daily looks way nicer on this too. But I'm pretty sure Solana has some sort of staking, what is it? Governmental type deal behind it. So that's why it has a lot more liquidity flowing through it. But again, we got a really strong support sitting around this $20 to $22 area. Now, one thing I will tell you guys right now is that crypto price action is far from perfect. It's actually one of the worst technical markets I've ever looked at. But either way, it still behaves the same way a stock would. It'll just do it at a different, at a completely different time. But what we're looking at here is Solana's looking pretty rocky on the daily so far, but that just might be because it's off of FTX and not something like Binance or something, or Huobi. But we're making some steady trends so far. Really nice steady trend, especially on the weekly over here. And again, our daily or our weekly candle closes on 1 day in 22 hours. So what I'm kind of looking for here is seeing if price wants to close above this. If you get a weekly closure above 43, or not even 43, 44, that basically means in a sense that any selling in this area over here uh, is no longer strong enough to push price back down and reverse it. Now, of course, you still have this whole mess over here in the wicks, but that's a story for another day. But what we're looking at here on the weekly is if we get a price closure above there and go on the daily, looks like price is already trying to retest it too. But typically what that would apply here is you get a big push higher and a small retest, like a really quick one, probably a couple hours or even like an hour to get into, and price booms. Now, off of the daily here, this actually does not look bad at all. This actually could go higher. But the entry to get into that type of thing is already kind of too late for it. The 4 hour over here, notice how this new high is now providing a support for the current structure. The price is in right here. If we failed through that, then the last point where price can hold on to is this swing over here, because this swing was a strong reversal point. So there's a lot of buying that occurred in this area over here. So if you fail this $43 over here and you move under it, and you keep moving it lower, you're basically gonna hope for this $40 zone to give you a nice bounce back higher. But looking at this, Solana's looking pretty steady. It's actually really efficient. This is not a bad asset trade in my eyes. Is it good to get in after the break and resistance is confirmed? It's good to get in when, price is giving you the pullback for that. But yeah, Jen, this is looking pretty nice. I hope you got in much lower. I would not get in where it is right now, but ETH is strong as far as I know. Daily. Yeah, it's looking real nice. But this area right here, really concerning. So you have your big impulsive area over here that price brought you to where current all-time highs is, if I'm not mistaken. Yeah. So notice how this little block over here, this little section, price over here was the reasoning for price to, or was the base area for price to jump higher. And we're subsequently moving back into the same area. How do you determine if the asset is efficient? You can determine the asset is efficient by just looking at it. If it's moving really slow, then you know that market, or that the market just does not care about it. Let me show you an efficient market real quick. Let me show you what an efficient market looks like. This is an efficient market. I'm turning off my drawings real quick. This is an efficient market. This is the NASDAQ. Now, if you don't know what the NASDAQ is the US index that averages the movement of 100 different tech stocks and the price movements of those tech stocks. And this is one of the most efficient markets in the US, or assets rather, because each point on here, if you're trading off of one standard mini contract, it is worth $20. So if you were just looking at this, and we're looking at this on an hourly chart, this candle here, I'm looking at this specific candle here from the low of the wicks. Let me see if I can grab the measurement tool. There we go. From here to just where it made a high, this candle alone within 1 hour is 168 points. Now, to do the math really quick, and because I'm really bad at doing multiplication in my head, I'm gonna pull out my calculator real quick. One mini contract gives you $20 per point. So if you're doing 168 points off of the hourly, that's $3.3 thousand in profit just off of one contract right there, and that's $500 in margin. That's just one contract within 1 hour, making 3.3K. Now, most traders are trading this, are working at a hedge fund, or they are trading for an institutional firm like Vanguard or something, or JP Morgan. They're trading with hundreds of contracts within, on a daily basis. This asset receives so much money flowing through it on a daily basis. It's kind of ridiculous. But, 100 contracts, right? That's $2,000 per tick. or per point, excuse me. 2000s times 168. Uh, that's 300K. That's 300K within an hour for those guys working for those companies and those hedge funds. And the reason why it's so efficient is because it's tracking tech stocks, which are one of the best performing stocks uh, on the U.S. stock market. And because tech corporations in the U.S. are they have an insane amount of activity and money and power, i.e., Apple, Microsoft, Facebook, Twitter, companies like those, even semiconductors too, like Nvidia. No, I don't think Nvidia is technically a semiconductor, but they have strong business in the U.S. As well as AMD. Not necessarily, Sam. So when I'm saying efficient, I'm looking at both not only money flowing through it, but the ability or the consistency of how often it gives you entries and how tradable it is. Because if you're looking at some inefficient asset, let me think of one. Someone in the chat gave me a shit coin. Actually, I think shit coin itself is pretty bad. When you have an asset that just moves in just these really long trends like this, it's almost ineffective to find an entry for this. Actually, this is probably a bad example because this is actually moving really nice the way I look at it. Let me look at something else. Ah, yes. Let me look at a forex pair, the Turkish lira against the US dollar. So this is a daily chart, but forex is a more long-term trend focus. So if you look at the monthly, this is bullish in most newbies' eyes, but there's other things behind this for the reason way it moves. But if you're looking at this and you're trying to trade it, and you go down to like a 30-minute chart, like an hourly chart, it's gonna be hard pressed to find a place for you to enter effectively and make the most out of it. For one, it moves in a very unorthodox fashion. You have these really strong uh, time-based candles where it would move just based on like the opening hour of a specific day, and then you move sideways for pretty much forever, intraday wise. And you'll find a lot of that in crypto actually. I think I saw one before. Let me look it up real quick. Someone asked me about this not too long ago. Oh, it was Tron. Here we go. Tron. So Tron is not too great. This is the daily chart. This is not the hourly chart. This is the daily. So on a daily basis, you're getting these really slow moving trends from what it was before. Each candle here is probably moving between fucking less than a penny to like maybe maximum 2 pennies, 2 3 pennies. But when you're looking at these, higher time frames, right, and you're seeing that it's moving incredibly slow. One, it's not receiving enough liquidity for it to be viable to trade, so no one's offering a damn thing to either buy or sell. And two, with that type of activity, you're gonna be hard pressed to find a decent spot to get in because spreads are so wide. When you're trading something like futures, like the Nasdaq, you're getting entry at where price is. So if you're buying in at 15K points on the Nasdaq, you're getting in at 15K. You're not getting in at like some odd number like 1503 or something, or like 15,003 or something like that, like where Bitcoin has spreads as well. But you're getting in at the spot that you wanted it at. If Because that means someone's offering a sell, a contract to sell at that level, and there's so many of it. It's it's just so, what's the word for it? But basically, the system has a lot of money and liquidity flowing through it that you're able to quickly grab that trade and the market moves on. When you're getting into crypto, it's not going to be the same thing because, for one, the money is so widespread. There's just not enough liquidity flowing through it. Two, you're also looking at uh, one of the faults or the cons of decentralization is the fact that you have a bunch of separate exchanges offering the same product, but they're not offering it from the same liquidity pool. So if you're trading on Binance, you're going to be trading with people with money that has money in Binance. You're not going to be trading with people that have money in FTX or something like that. When you're trading the Nasdaq, if you're trading off of TD Ameritrade, you're probably going to find someone else's order on Charles Schwab, even though you're trading through TD Ameritrade. That's not the same case with the crypto market, since it's decentralized and the fact that different exchanges are providing different liquidity. Thus is why you have different prices as well. So to answer your question simply in efficiency, it's not only about the amount of money flowing through it, but it's also about how easy of a trade can it get into. There's a lot of different factors into that. All right, any other questions here? Oh yes, I was supposed to look at ETH. So ETH, we're looking at this base level over here that gave the movement to the high. Price over here spent a couple days trying to fight off from moving below it, but obviously you get that big sell, closing below it. And then price from then on went onto a range over here. We have thus far as, or so far, we have broken out of the range. So that's good. You can also see the price that's retested into the top of the range at one point or another over here on August 9th. Now that we're moving back into this 3300 area, what I'm really looking for around this is how the weekly reacts to it. So if tomorrow is Sunday, we just get a solid candle, then I'm going to be really concerned because the way this is supposed to move on is going to be dependent on either price tapping into the opening of this candle on May 17th, because, and the reason why I'm looking at it is because on that particular price point, it also is extending itself over here, 35.84.79. Look at 35.84.79. There we go. This also extends as a previous resistance on a smaller time frame over here from where price impulsively moved to the current all-time high, as well as price bouncing off of it as support. So this is a really important level over here. And so far, ETH has been approaching this zone of around 3,300, 3,400, kind of strong. But so far, it's looking a little bit weak. Just a little bit weak. It's still perfectly in an uptrend, but it's kind of concerning how slow it's taking for it to kind of feed off of this area over here. And this area has a lot of, it moved down really strongly, and typically that implies that not all the sell orders gets filled there. So we still have some underlying sell limits left over from this area over here. Now we're still kind of sitting in it. Yes, we do have a few rejections in there, but with that being said, we're still popping off to the upside a little bit stronger. So I'm really trying to wait and see how the weekly candle reacts to this area here, because if we bump ourselves into this low, this wick, we're barely tapping into that, just barely. I mean, only on Coinbase chart though. I haven't looked at the other exchanges chart. But this over here is not looking too pretty to get in on as a trade. There's definitely a better opportunity elsewhere to get in, because this is currently a swing to the high. Because if you move down to the hourly over here, you got your low right here, and this is your current swing to the high. And you just don't want to buy highs. What alt is better to scalp today / weekends? None of them. I'm gonna tell you right now, just don't trade weekends. It's gonna be so much better for your mind, for your mental health. Do you think rich people are working on the weekends? I don't. Wall Street doesn't work on the weekends. I'm telling you that right now. They don't work on weekends for a reason. There's also a reason why the stock market's closed on weekends too. Right. Any other questions here so far? We are gonna end the stream a little bit soon. In a few minutes here. So I'm just gonna take any last questions for the night. I'll just started features for a week, so I'm kind of in a momentum to experience more. Well, if you want to experience weekend action, go for it. But I'm telling you right now, it's gonna be a waste of your time. It's not even that risky, to be honest. It's just not worth trading. Simply because, one, your volume is significantly less, so you have significantly less liquidity to get into. Action is much more scarce. And a lot of you guys need to start looking into trading certain time zones. Because depending on the asset, certain time zones can give you uh, much bigger moves. You're welcome. But start looking to the time zones that you're. I mean, I don't know where you guys are from. I'm from the U.S., so I literally wake up at market or close to market open for the U.S. and I have the best time to trade available because all the moves for the markets I trade are made during the U.S. market hours. Yeah, if you're from Asia, I mean, I don't know where from Asia. If you're looking in Australia, you might have a better time. Singapore. Okay. Wow, you live in Singapore? That's interesting. That's actually really interesting. I've always wanted to visit. Crypto's usually now. I would argue that crypto's usually more London. So London and US time zones. Because during Asia, for me, right? I'll mark out my Asian time zones for Bitcoin over here. So Asia for me opens up at 6 p.m. Central. So on here, that would be 1800. And it lasts for about 8 hours. So 1, 2, 3, 4, 5, 6, 7, 8. Okay. It closes at 2 a.m. I have ETH out of Sol and they're all up. Shouldn't I just let them ride up and down? I mean, completely up to you. I'm not the one in control of your trades. Because, for one, I'm not responsible for your actions. And two, I don't know where you got in. I don't know what entry you have. It's 9 to 10, or it's 10:40 a.m. now here. I see. So it's a good time-ish. But notice on my chart right here, these blue vertical lines. Mark it out real quick. The time zone, or it's relative to what is occurring at the market at the moment. But you have a much better experience trading at both London and American times. I don't trade cryptos. I just bought them for long term. I mean, if your belief in the asset is for the long term, then go for it. Me personally, though, as a trader, I don't have anything long term personally. I don't have that much trust in the market to do long term trades. I like to know where my money is, and I would like to watch my money and see how well the money is performing. So most of my trades derive from scalping and day trading. So long term wise, when I'm looking at charts, I use long term to look at the overall trend. But for my entries, I would like to be sure that I'm not losing money at any point at any given time. So my trades are mostly day trades and scalps. So you and I are we have different financial risks. Not only financial risks, but different trading strategies and different mindsets. Yes, Wall Street open and close. That is correct. So that for me would be 800 right here at 800. So at 1800 is Asia for me. And I'm just going to mark out all the times, the relevant times. So at 200, that's when London opens. 1800 is when Asia opens for me. And we're just going to mark a few more days here. Give me a second as I mark these out. So when you're trading something like crypto, and let's say in this instance you're trading specifically Bitcoin, from Asia to London on this particular day, you probably had the better hand in this instance. But in this case, market moved up about almost $1,500 for Asia. Over here, London opens at 200, and from there to market close, which is around 1300 for me. Market around moving around 1300. Moving into there, you have your after hours. Market doesn't open up until Asia over here, and this range over here is gonna give you about max $1,200 in liquidity. Now, unless if you're living in Asia like Singapore and you intend to trade the whole day, this is pretty much, I think this is your 3 a.m. No? Let me check that. Let me pull up a time converter real quick. I know that you guys are about 13 hours ahead of me right now. Yeah, give or take about 13 hours. Basically, this would be your 4 p.m. right here. So if you're trading through 4 p.m. into the closure of American markets, okay, this around 1300. You have a bigger range to work with. Same thing over here. In this instance, price was trending overnight. Over here, highs into 1300s. About roughly 800 bucks off. Highs into London Open. 900 bucks into London to US close. 1300s. That's 2.2K right there. And here you got Asia Open into London. Your range is about 900 bucks, 900 US dollars. And then from London into US is actually kind of stupid, but it's actually ridiculous. Hold on. I didn't realize that market reverse at this point over here. 1300. It's 4,000 bucks right here. This is like a fifth of the price action in comparison to London and US, or Wall Street, if you want to call it Wall Street. But what I'm trying to say is that depending on the market and asset that you're trading, the time zones is associated with those assets that you're trading is going to be much better if you trade it during those times. Now, the reason why you're seeing a lot more movement depending on the current price action on London and American time zones or opens is, for one, the American market has pretty much the most amount of money. That's a given. A lot of money is through the American markets. But two, the amount of liquidity flowing, I mean, and this is in terms of what would you call it? The European, I would just say the British markets, but Europe has their own thing too. But the second biggest market in terms of that is going to be from the European markets. They have the second biggest market. I mean, it still depends on what asset you're trading, because if we're talking about something like uh, forex, or you're looking at something like the European euro against the US dollar, I did not want to look at a crypto exchange. Here we go. If you're looking at something like this is a much more evident use of this. So again, 1800, and then you get your London, and then you got your US. And then, you know, your price ranges. Just real quick. So Forex moves in pips. It doesn't move in currency amounts. It moves in the form of points, also known as pips. So they have a different unit of measurement. 1300. So when you're looking at Forex, this is the European euro against the US dollar, by the way. You're getting a lot more action than if you were trading in Asia. With London, because the European time zone is very close to London, and the banks over there are handling this type of currency, you're going to get a lot more activity flowing through it, because for one, it's their currency, and two, the amount of currency buying power that they hold is vastly much more than what Asia provides. Now, you could argue that the Japanese market does have does have a lot of money, but in comparison to the European and American markets, it's not that big. So again, it still depends on the asset you're trading, but time zones associated with trading is something that you should really focus on. Because if you're trading something like U.S. stocks, then it's probably better to trade when U.S. Wall Street opens. I mean, you can only trade at, whenever the stock market opens, but still, the time zone associated with that is gonna be very relevant here. And again, for example, if you're looking at something like the Australian dollar versus the Japanese yen, you're obviously going to get much more activity uh, around the time when Asia comes around. So again, 1800 for me is when Japan opens their markets. London closes around 200. Just based off like two out of three of these already shows you that the market times is so relevant here. Because again, with the respective countries, this is forex, so the banks are trading this. There's a lot more money going to be flowing through that time because it's their work time. People work 8, 9 hours a day. They're going to work from that 8 a.m. to 3 p.m. because it's relevant to them. So that 8 a.m. to 3 p.m. should be relevant to you. And this is really only for those that are seeking to actively trade as a career. If you're looking to invest, then that's a whole different ballpark. That's a whole different book to read about. But when you're looking at this type of things, uh, it's really relevant, especially if you're trying to get into day trading, because you have to figure out what time you got to start sleeping, what time you got to wake up, because you want to get the best part of the trend, the most part of it. All right, guys. That is gonna be it for tonight. Really happy you guys hopped on here tonight. There's a lot of good questions here, and I hope everyone here has taken something and learned from it, or learned something new rather. So I will be here on a weekly basis. I will be here every Friday at I'm gonna announce my times. I'm gonna see if Pablo or Nimia can give me a channel to make an announcement for his stream times. But I'll be here pretty much every Friday, every week. I'll be taking your guys' questions, any charts you guys want me to look at. I'll be teaching some strategies if you're confused on a particular one. I can work with it. But I'll be here every week basically, and I'll be here so as long the market exists. Uh, just to end off on today, I am currently a college student. I'm on my last semester. I'm almost out of it. I'm currently in a business administration and media production major, and uh, I'm gonna continue to trade futures and forex as a primary career. So I'll be here for a long, long time. And with that, I hope you guys are also here for a long, long time to learn and make money for yourself. So again, thank you guys for coming on today. It was really nice talking to you all. It's really nice meeting you all as well. Yeah, that's my yes, actually thank you for mentioning that. I do have a Rokai Charts channel under the VIP crypto category on Discord on the investing with PNN server. I post mainly uh Nasdaq and ES charts there, and I post updates on what the market trend is doing. And for those that trade US stocks, is very relevant to you uh, in terms of finding where the overall trend of the market is headed towards. But if crypto becomes a bigger interest from members, then I will begin to include crypto on daily updates for you guys to take in and make decisions for your own. But all right. That's gonna be pretty much it for tonight, guys, or rather this week. But if you guys ever need anything, feel free to at me on the Discord. Don't try to DM me because I have my DMs turned off because of all the bots. So, those bots are ridiculous, always saying that I've hit the raffle or hit the lottery and I've earned point 0.4 Ethereum or something. But either way, uh, I'll see you guys next Friday. So until then, I hope you guys have a great and safe weekend. Drink your water and go outside and get some exercise. Thank you guys for your time. I'll see you guys next week. Peace.